welcome to the Stock Market Performance Playlist. Based on recent reports and market analyses through late 2025 and early 2026, the second Trump administration's economic landscape is characterized by aggressive protectionism, a shift toward digital assets, and significant personal financial gains for the Trump family. Stagflation and global credit impact. The administration's 2025 Liberation Day tariffs, reaching an effective rate of 23%, have triggered self-generated stagflation by simultaneously driving up prices and suppressing growth. US and UK high tariffs and mass deportations have created labor shortages and sugar-high inflation. US GDP growth is projected to fall to 1.5% by 2026. Europe, the ECB has been forced to cut rates to 2% to cushion the blow from trade disruptions, particularly in the automotive and machinery sectors. Japan and South Korea. These export-heavy economies face reduced demand and have begun diversifying away from U.S. treasuries due to tariff-related tensions. Stablecoins and government bonds. The Genius Act of 2025 integrated stablecoins into the U.S. monetary framework, requiring them to be backed by short-duration treasury instruments. Market effect: stablecoin issuers like Tether have become heavyweights in the bond market, holding more treasuries than countries like Germany or South Korea. Bond types: there has been a notable surge in inflation-protected securities, TIPS, as investors hedge against tariff-driven price hikes. Credit crisis. While the stock market S&P 500 has hovered near highs due to deregulation, U.S. high-yield credit spreads have widened, signaling increased default risk in a high-interest rate environment. Trump family financial gains. As of late 2025, a live tracker from the Center for American Progress indicates the Trump family has pocketed over $1.8 billion in cash and gifts since the 2024 election. Other reports estimate total family gains since 2017 at $3.4 billion. Crypto ventures. Approximately $1.2 billion of recent gains came from crypto ventures, including the WLFI governance token and the Trump meme coin. Real estate and fees. Mar-a-Lago initiation fees were raised to $1 million, and Jared Kushner's firm, Affinity Partners, received billions of dollars in investments from Saudi and Emirati sources. The three main architects. The following individuals are the primary drivers of the current monetary and trade strategy. Career experience: financial model follower. Scott Bessent, former CIO of Key Square Capital hedge fund and George Soros protege, now U.S. Treasury Secretary. Macro hedge model focuses on a 3-3-3 plan: 3% GDP growth, 3% deficit reduction, and 3 million barrels of oil. Howard Lutnick, billionaire CEO of Cantor Fitzgerald Financial Services firm, now Secretary of Commerce and head of tariff strategy. Mercantilist protectionism uses aggressive tariffs as a tool for fairness and a lever to force global trade resets. Russell Vought, former OMB Office of Management and Budget Director, and Heritage Foundation, American right-wing think tank leader, now returning as OMB Director. De-administrative state follows a model of extreme fiscal contraction and deregulation to shift capital to the private sector. Help us to bring you the best content possible. Subscribe, share, like, and comment.
This is the Stock Market Performance Playlist, the sound of victory.